And obviously coming on the back of a very interesting day yesterday. Very large moves seen in the market from ECB's Draghi. Gave a speech opening up the ECB forum, which is ongoing throughout today as well, but delivering a very kind of optimistic, quite bullish tone. I wouldn't say it was kind of hawkish, it was more just he was incredibly upbeat about his assessment on the economy. This was a little bit of a subtle upgrade, if you like, in terms of his overall outlook than what we had been more accustomed to in recent ECB meetings and communication. Even looking at the charts this morning, the euro, you can see from yesterday's session on the top left, we've seen a really powerful move to the upside, about 150 pips or so. The DAX under pressure, as to is the Bund, as German yields have risen quite sharply. So this would all be indicative then the way that these various assets have reacted as to a policy tweak in a more hawkish manner, i.e. that not that we're getting close to interest rates rising in Europe. This is more about the context of how quickly do we get underway in this removal of this period of accommodation in terms of the ECB. So it's wordplay, not actual action that's taken place, but that's been enough for the market to kind of rephrase its time frame for when the ECB might start to tweak expectations going forward. So what we've had here then is looking at the euro all the way up in excess of 114 this morning. In fact, we're at 2017 highs here at the moment, as no doubt people will start to be talking about taper talk when it comes to the ECB. This is something we're looking for in communication for the ECB going forward in the coming months. But you can see here, Draghi pretty much spoke right at the bottom of that candle pretty early in the morning, going into 9 o'clock yesterday. Technically, we had an initial test and it failed to break the high on the 14th. That was the weak US data before the FOMC. We initially hit that level. It came back down, only to then, when it broke, some stops, those playing the kind of top end of the range play, getting stopped out, and the price continued to move higher all the way through really into the US session, and then Asian participants coming in overnight, and then continuing to take that theme further forward. Just a couple of people saying the stream's not coming out. Just reshared the link again, so let me know if that works. But yeah, just seeing the euro having another little push here, session highs. And again, this is nothing new that's occurred. The one thing that you have had is that ECB's Draghi is speaking again later today. There'll be a lot of question marks on, does he try to fine-tune the message that he delivered yesterday, i.e. we've had this big hawkish reaction. Does he come out today and slightly temper that in order to keep the market in check and not get too carried away with itself with this aggressive repricing that's occurred in the last 24 hours. The one thing is you've had ECB's Constancio, who's the second in command at the ECB, and he has pretty much reiterated really what Draghi has said. And so obviously we'll be listening out for the President later. He does speak in a panel discussion alongside Bank of England's Mark Carney and also Bank of Japan's Kuroda. So the three heads of those respective central banks will be speaking. But for the time being, markets still seemingly running with the same theme as yesterday. So the DAX is still seen lower. Notably though, this does come after US indices did finish down yesterday fairly sharply. Now, looking at the percentage changes to close last night, the S&P was down 0.8%, the Dow was down 0.45%, the Nasdaq though was down 1.8%. So a sharp underperformance seen in the Nasdaq. One of the biggest headline kind of single stock stories yesterday that was circulating was about this EU fine for Google, and that's about the kind of monopoly position for online searches that gave the company an illegal advantage. And so Alphabet shares were down about 2.5%, given that they're such a large company, obviously acting as a big headwind for the tech sector. And so the Nasdaq sharply underperforming. But the S&P down 0.8%. I know that doesn't sound like a lot, but that's actually the biggest decline in the S&P on a one day in 6 weeks. Now, hence the tightness of the ranges that we've tended to trade in US equities. A down day of 0.8 is actually a 6-week biggest volatility we've seen to the downside, or a move to the downside. Where does that put us? Well, you can see here technically yesterday we broke quite a key level at 24.28. That was the various support point really for the bottom of the range from the last week prior to that. We then also broke the 16th low, and we found a bit of support now around the low prints that were seen at the 12th and the 15th. So if you're looking at the June kind of range, if I just take out these center lines, we're pretty much right at the bottom end of that at the moment. So today's going to be very interesting. You can see actually where that wick low is from what we printed very early in the Asia Pac session. I'll just widen this out a little bit. This was also the high that we had back on the end of May, and then obviously where we traded overnight in Asia for a test. So pretty significant level here to keep an eye on. One thing that's happened the last 2 days is we've failed to have this kind of traditional, over the last few months, kind of ramp up towards the close of Wall Street, where early weakness tends to be countered by quite aggressive buying. That hasn't occurred the last 2 days, and that's put us all the way back down to quite a pivotal point in the context of the last kind of 20 trading days or so. So definitely to look out for. Any break of that could then see some further downside pressure. If you're looking at down at S2 today, that would be 3 points then from the 2400 handle, which is also a very significant level, not only for a psychological reason being a round figure, but also it's that end of May low. You've then got the respective highs that we're seeing throughout the month of May to also keep an eye on. So again, just planning ahead accordingly and looking at some of these levels would be prudent. Obviously, the one thing that the ECB does mean is a removal of accommodative policy has generally been a net negative for European equities in response. And really it was the weight that came into DAX future at the time. It did recover, but then pushed lower all the way through to where we are at the moment. If that were to continue, again, this will add more propensity then for those downside levels to maybe be tested in the US. Obviously, you've got a bit of a policy play here that would be stock negative. Then you have individual stock movers like Google, who due to their heavy market weighting tends to drag down the sector a lot, and then hence you get this kind of continuation of a push down. Technically, the other big move, of course, that was very interesting yesterday was the Bund. This arguably, out of all of the assets, was the biggest move. I mean, we went a full 2 points almost. We were trading in excess of 165. We're down at 163 today. So I know some of the live guys in the trading live room would have been watching this very closely, because at the time when he spoke, the big level we were watching to the downside originally was that low print on the 16th. That broke. You can see it on the initial break. A lot of people would have been playing that as an entry point, given the fact that the move was already quite large, about 75, 80 ticks at that point, thinking, well, there isn't really too much in what he said. Yes, it's more upbeat, but actually I think that's a pretty solid support level to get long. You can see there the little wick, people getting stopped out, the price coming back up pretty much to the level before then. Another really strong push when the US came in through that afternoon. That also exacerbated then by a break of another important level in the Bund, which was around that 63.89 mark, which, as you can see here, circled up on these 3 points. That giving way, further downside momentum seen in the Bund future, and we've remained lower since. So again, despite equity weakness, the Bund also moving lower. So this is counterintuitive, of course, to traditional kind of economic theory, which should say equity weakness should fuel a bid to fixed income in a flight to quality move, i.e. coming out of riskier assets, equities, into fixed income. But the reason why these assets are moving in tandem with each other is because this is a fear of monetary policy tightening coming from the ECB by how optimistic Draghi was in the context of a slightly more, I would say, cautious approach that he's had up until yesterday. Now, one thing to keep in mind is the ECB forum is ongoing throughout today as well, and Draghi is set to be speaking. So, you know, it's not been unusual for, in past cases, when you've had such a big move in the market from a central bank speaker, for them to come out and maybe just soften the tone slightly in order that the market doesn't reprice itself too far away from what the ECB's intention was. And so I'd definitely be watching out for these comments today. I can see some of you already have jumped into some pretty early trades. I would say that given, as we're going to see shortly on the calendar, there's a lot of central banks speak, and given that was the real catalyst for the move, the major move in financial markets yesterday, I'd still be very inclined to just wait for those speakers, because that might again be your better tradable opportunity. Meanwhile, we did have Janet Yellen speak last night. Now, Janet Yellen, I'd say, out of all of the central bankers, was probably one of the lesser interesting. So in what typically is normally the most important person of the central banks, given that the Fed are at a point where they are actively hiking rates and talking about this balance sheet tightening process, but Yellen was actually fairly, out of everyone, probably more neutral rather than being so upbeat like we heard from Draghi. She said that asset valuations are somewhat rich by traditional metrics. Obviously the kind of product of doing such a large scale QE for such a long period is overvalued asset prices, and she's kind of paid dividend to that, which would be kind of more of a dovish statement if anything. She went on to say that we've made very clear that we think it will be appropriate to the attainment of our goal to raise interest rates very gradually. So she's continuing to kind of keep that same rhetoric, gradual, cautious. But if you put this into context, looking at the markets this morning, euro already taking another move to the upside, you've got a gradual, cautious Yellen in comparison to an optimistic, positive, bullish Draghi. So you've got a little bit of a short-term policy divergence here. And the dollar got hit yesterday, chiefly the dollar index weakening on the euro strength, but again might explain some of the reason why the euro again has taken another little push to the upside this morning. Consequently, with this tone from Yellen and the dollar weaker, cable also has been holding up, and we are trading slight positive, but there's outperformance about 2 to 1 in the euro against the pound this morning if you're looking at the major pairs. Talking of the UK, Bank of England's Cunliffe has said that domestic price pressures buy time on rates. So obviously it's quite important to be monitoring Bank of England speakers at this point in time, because we've had very mixed signals. You've had dovish Carney, now's not the time to raise rates because of anemic wages, comparative to Haldane, who was much more upbeat from a guy who typically is more dovish. And so we've had this kind of hawkish, dovish divergence appear even within the Monetary Policy Committee of the Bank of England. But Cunliffe came out last night, helped draw the battle lines for the August interest rate decision, saying that policymakers have time before they need to hike. The Deputy Governor said inflation is driven weakness in the pound. So he said that while some members of the Bank of England's rate setting committee have argued that consumer inflation of 2.9% means an increase in bank rate is required imminently, Cunliffe said that it has been driven by the pound's depreciation since the Brexit referendum, and that wage pressures have remained low. So if anything, This kind of solidifying then his view not to take action, but also I would say on the barometer of Haldane on the hawkish side and Carney on the dovish, this probably fits more towards the governor, given that he's saying that this inflation that we're seeing is a byproduct of the pound, and so eventually then this should peak and trough going forward, which is as per the Bank of England's expectations. So they don't need to hike rates because of the conditions elsewhere and the pressure on wages and so on and so forth. The other thing, of course, that's ongoing is politics, and the Conservatives continue to be, quite frankly, a bit of a mess at the moment. Cabinet Brexit tensions in the open. This has come after a bit of discrepancy in communication between two very senior members of the cabinet, that being David Davis, person in charge of negotiating Brexit on behalf of Britain, and the chap you're looking at, Philip Hammond, the UK Chancellor. The third person is also Boris Johnson. So what's happened here is between David Davis and Hammond, a bit of contention about Davis trying to play the more hardline game with Europe, as he's at the kind of sharp end of negotiations in Brussels, whereas the Chancellor playing it a little bit more pro-European kind of stance, if you like, and putting the economy at the forefront, which means then having discussions about transitional agreements, ability to stay within the customs union is obviously something which he would want to maintain, which makes Davis's negotiating hand a little bit difficult to manage. Hence the two are having some discrepancy in what they're saying at the moment. In terms of Boris Johnson, Hammond had a bit of a pop at him yesterday. Boris Johnson had said the UK could have its cake and eat it when leaving the EU, but basically Hammond saying that he's trying to discourage talk of cake eating. The question is not whether to have the cake or eat it, or even have the largest slice. So again, a bit of a shoeing for Boris by Hammond. And don't forget, these are all supposed to be three people on the same team. So political strife amongst the Tories, despite them getting the DUP on board at the beginning of the week, continues to be fairly fragile situation and something to monitor. If they can't, you would imagine, get their own house in order, then this should be to the detriment then of being able to secure a cohesive Brexit agreement. So it would be a net negative. But at the moment, I would say, in terms of intraday financial markets, there is bigger things at play. And if you look at cable, really this is more of a the euro strength again means that the dollar as well with the Yellen comments is weakened, and so that's helping prop up really this cable price action for the time being. Looking at cable, you can see here last night we had a bit of a breakout and a spike as indicative by that extension on that wick. Well then that really came because we broke the top end of the post-hung parliament high range that we were trading. I remember this happening last night. I was still here later in the evening. When it broke this level, it just literally shot higher. Again, a lot of stops getting run. Price immediately spiked but came back to that level. And as you can see, we're again sitting at the top end of that range here between post the election and pivot, which it has briefly tested this morning. So UK politics still remains pretty fragile at this point. Brexit negotiations still to be monitored, but I would say the bigger trade at the moment and the bigger situation is ultimately to do with the ECB and this kind of breakdown in what the Fed are saying and what the ECB are communicating. The one thing I guess to put into context is we've moved from 112.50 almost up to 114.50, getting close then to a 200 pip move within 24 hours in the euro-dollar pair. One would imagine then that we start to get possibly a little bit exhausted and we've factored in or priced in the news that Draghi has said. So just going hell for leather long here in the euro, I think might be a bit of a mistake, because we've already moved substantially higher, and we are now at levels not seen for a long period of time. So I'd be more interested to see, and I would say from a news perspective, the risk could be when Draghi speaks again later that he reverses course, maybe tones down some of the optimism from yesterday, and there could be an opportunity for a bit of a reversal of the gains, given that they were so steep yesterday. At the moment, that isn't in play, but the question is monitoring then the comments that come later for a potential opportunity if that scenario did arise. Likewise, if that did materialize, then there's room obviously for the DAX to see some recovery, and the Bund as well. But we shall see. This is all hypothetical, of course. Okay, rounding up the other news coverage, we have had some news for the oil market. This is your regular API crude oil inventories, then your insight as to what to expect from the DOEs we'll get later this afternoon. Now, firstly, let's just have a quick look at the chart. We saw a pretty decent move to the downside. That was highlighting the move that we had last night, just after the 9:30 when that data started to circulate. And the reason why for the bearish reaction, the headline build 851,000, expectations were for a drawdown of 2.25 million. So that's a fairly substantial miss. So the headline reading, the Cushing doesn't have an expectation, but was a drawdown, so by default would normally be a more bullish scenario. Gasoline, though, was a build of 1.35 million, expected was for flat. Distillates was a slightly larger build. So in overall summary, the gasoline and the crude headline in particular were fairly substantial builds comparative to expectations, hence then the negative price reaction that occurred in the market. Now, we have seen some reversal of that in the early Asia session, only then for really Europe to come in, hit the sell button again momentarily to take price back to pivot. But I would say that crude here and through the morning, one thing I did notice actually yesterday, monitoring some of the trainees in stage 3, was that you had this really big move in the euro and in the Bund and in the DAX, initiated by fundamentally Draghi and technical levels being breached, and yet most people traded oil. Actually, I think nearly every single one of you was trading oil at some point. And what I'm getting to, what I'm alluding to here, is that you've got to identify what it is the big theme of the day is, and therefore which product is going to be the best to trade, i.e. which is going to see the most biggest and cleanest move. And oil wasn't really that asset yesterday. And I think a lot of people got a little bit caught up chasing their tail with oil. And what I'm saying with today, you could be a similar situation. I don't really see much need to be getting into oil this morning, certainly ahead of the afternoon's DOE numbers. We had bearish data, fine. We found a bit of support close around pivot this morning. Price action then between pivot and the 44 handle might be fairly contained and subdued. People will just wait for the inventory data to then move on accordingly. The more interest to me is the calendar is absolutely littered with central bank speakers, and if yesterday was any guide, then actually that's where my attention is going to be. Do we hear repetition of the positive rhetoric from the ECB, or do we get a bit of a reversal of tact, and potentially then that creates a bit of a pullback in some of the moves from yesterday? You've got ECB's Mersch, 10 o'clock, Sabine Lautenschlager, 10:45, ECB's Constancio, 11:30, Draghi, 2:30. There is plenty of potential market activity that could come out of these. So again, that means then my kind of baseline focus is going to be back to those European assets again. Oil, I can worry about later on. The only thing that would disrupt that view would be if there was updates maybe on Libya and Nigeria, if they had substantially increased output, or source comments about potential further steps OPEC could take in order to counter the generally low prices that we have at the moment. If that doesn't occur though, it's not really the asset that I'm keen to watch. And as mentioned before, with equities as well, like the S&P down at the lower bound of recent June ranges, that's again something which technically looks more interesting at this point. Other speakers, we do have Mark Carney talking again. This is the panel speech, so Carney, Draghi and actually Kuroda are all speaking together. So 2:30 will be very interesting. This obviously alongside the open on Wall Street. You've also got, I'm not sure they've got the chronological order here right, but Feds Williams is also speaking as well. So a lot of people there. And then data-wise, there's not a great deal in UK and Europe this morning. When you have a day where there's not a lot of European data, what the market tends to do is it will cling on to the general broader market theme that had developed both yesterday, overnight and into the morning. It will generally continue because there's nothing here to disrupt that focus. We've had a negative close on Wall Street after European equities closed lower yesterday, chiefly because of the hawkish rhetoric from Draghi. That led to a negative Asia Pacific session, and then that kind of sentiment has just leaked over into the European Open this morning. Consequently, gold up as well, about $5 this morning. This afternoon though, there are a couple data points to be aware of. You've got US trade balance, US pending home sales, and then of course the Department of Energy crude oil inventories at a regular time of 3:30. Okay guys, coming up to 9 o'clock then. That's your briefing for this morning. As I said, Philippe will be overseeing stage 3 guys. Any questions, please direct them to him. And I'll also be available should you require any assistance at any point. Okay guys, have a good day. I'll see you in the chat room. Thank you very much.